Hey guys, Jeff with Optionboxer.com, back again, finally back again after a long time away. I've been working on my website, and then of course my day job has kept me a little more occupied in the recent weeks. But regardless, I'm back, and you can see here that I'm showing you my account monitor page, which is not something I typically do. You can see probably first off that I'm down by a little bit there. I was down by a whole lot, and I've kind of battled back. Made some trades that have kind of got me back to pretty much even, and you can see the open positions I have. You're free to take a look at those if you'd like. Before we do anything, and before you look at those, really, please know that I'm not a financial advisor, and this video is not in any way a recommendation for you to place any trade or invest in anything. Really, it's just more or less me sharing with you what I'm doing, and you can use it for your own education or entertainment. But that being said, the trade I want to set up today is Cisco, and I attempted to make this video earlier. So I've already initiated the trade, so I won't initiate it again outside of just showing you the trade. But the first thing I want to show you is a vertical spread, and I've attempted to make this video a number of times, and I'm not happy with kind of the outcome of it each and every time. So I'm kind of reverting back to what I'm comfortable with for now, and then when more time allows, I'll start to engage kind of the other thought process I had, which was going to be videoing myself and kind of trying to make things a little more presentable. But we'll cross that bridge in the days ahead. But for now, I want to get this to you. I do want to be a little more transparent. I want to show you things like the monitor tab, show you my profits and my losses. I'll probably blur out any account specific information obviously for just security purposes. But Cisco seemed interesting to me. And so the first thing I did is, I wanted to open a vertical spread. So I have what I call my vertical roll and ladder watch list, which is, these few stocks here. And Cisco looks like it's at an interesting point because we've got kind of this long-term resistance area. And yeah, I can see that the last couple of days it's broken out above it, and that may be a bullish sign, and this thing may continue higher. But it broke out above these two high points here the last time before ultimately failing and falling back down. So just going to go with the I guess the probabilities or the odds here that price will fail at this level as well. Looks like the RSI is a little bit overbought, and the IV rank and the MACD don't necessarily point in our favor, and really and truly neither does the Optionboxer.com spreadsheet tool. But there were a couple of things that kind of caught my eye. First off is the fact that all of these are bullish. Now the market internals of course will change daily. The put call ratio will change daily, and the skew will change daily. But the long-term trend is bullish. So that alone may be enough to suggest a bullish trade. But what really caught my eye is the difference between the max pain and the current underlying price. Now, I've initiated the trade. If I open my spreadsheet tomorrow and the numbers here are a little more in line, if maybe the max pain is at 48 or something, I'll probably go ahead and close this trade, or try not to get into it. If I've been filled, then of course I'll trade it. It's not a big deal. But if I don't get filled, I'll probably close it and look for a better one. But just the large difference there between the max pain and the actual underlying price is points to a fairly bearish, points favorably to a bearish position. And then the other thing was the some call out of the money. It had a pretty wide gap, and I took a look at the numbers, and it seems to look supportive. The market just really thinks that this thing is going to to experience some downside here in the days ahead. So I'm going to trade with that, and like I said, that's why I set up the vertical spread here. But really, more or less, what I wanted to tell you was not that I was setting up a vertical spread. What I wanted to share with you is kind of how I set it up. And this is the video that I've been trying to make for a number of weeks now, and it never sounded right, or the video didn't come out properly. There's really just a lot to editing a good video. And so I put it out there, and then I deleted it, put it out, delete it, and so I wasn't happy. But I'm going to put this one out there, and it's going to stay there. I'm not going to spend much time editing, just trying to get this to you so you can see, for those of you that may be interested to see it. The first thing I'm going to do is I'm going to set up a vertical spread with the smallest strike width possible. In this case, it's $1. I've attempted this strategy in a number of different ways. You could also set this up with only a few days to expiration. Of course, if you do that, then you need the move to happen in your favor pretty quickly. And so I don't know that we could get the... So we could make it work if we wanted to trade that. I'm going to go ahead and do it a little bit longer term, trade it for 32 days. All I'm looking for is two things to set up the trade. I'm looking for $1 wide or 50 cents if 50 cents were available. I want the minimum amount, as a strike width to start the trade. And in this case, it's $1. So I'm going to sell a vertical, and I'm looking for at least 50-50. Or $50 worth of credit to $50 worth of risk, or 50-50 risk reward ratio. And so in this case, I'm just a little shy of that, but it's not staggering. So you can see I've got the trade listed for 48 cents, and likely I would have to have a little bit of a bullish move here in Cisco tomorrow in order for me to get filled on this at the 48 cent price there, but that's okay. Again, if the numbers here change dramatically tomorrow when the market opens, then of course I will forego this particular trade and look for another one. But for now, I'm going to enter it, and then if for some reason this goes in my favor, or I'm sorry, if this trade goes in my favor, I'm looking to capture a 25% profit, which would work out to about $12 to $15. I think it's 12. Exactly, but I'd probably try to push it to 15 just to cover commissions costs, and then I would get out of this trade. So try to hit quickly for a decent profit and move on. $15 isn't staggering on a 50 cents there, so it's certainly manageable. If it does go against me, I'm willing to hold this till it expires. So I'll hold it all the way to expiration. At that moment, I'd be looking at a $52 loss. And I would probably, if I still felt bearish on Cisco here, I'd probably roll it out to the May expiration. And at that point, I'd have to do one of two things. I'd have to either roll it further in the money, which I don't love to do, just because volume and liquidity kind of dries up, and then you start getting into some wider spreads. So likely what I would do is I'd probably try to roll it, instead of the 49 strike, I'd probably try to go 48 or maybe even 47. And then widen the strike width. So I would probably go from $1 wide to $2 wide. May not have a choice, may have to go to 250 wide, but try to go up incrementally in the same increment, but maintaining a credit on the position. If I did have to adjust and then I was in this trade for a $2 wide spread, then I'd probably look to take a 15% profit, or not probably look, I would look to take a 15% profit. And then if everything failed and I had to consider rolling it again, which I typically don't roll it out for a third time, but if I were going to, if I just really felt like this thing had just gotten away from me, and at any time now it's going to move in my favor, and I would roll it to a third month, I'd probably go to $3 wide if I could swing it. If the strikes would make it work, I would probably roll this to $3 wide, and then I would be looking for a even trade. I'd basically just be looking to get the money back that I had lost at that point, or the money that I was down, maybe not lost. Lost is the wrong terminology, because I guess you really can't lose it until you sell it or until you close it. So I'd basically just be looking to break even if I did have to roll it out for a third month. Now, being as this is only one contract, I'd probably roll it out to the second month. If it was still a loser at that point, I'd probably close it and move on to another trade, or just close it and focus on my other positions at that time. But going forward, I'm going to try to keep all my options trades for this channel in a separate account. I've got two accounts here at TD Ameritrade. That way we can just look at the one account instead of all of these. I do make some other investments here in my IRA account. Again, I'll probably try to cover up any personal information just for security purposes. This is on YouTube. But that's it. So I just wanted to share this with you guys, and again, I'm sorry for the long pause or long delay on the videos that I typically make, but this one's out there. If you like it, please like and subscribe to the channel. Hopefully you guys were able to gain something from it. And if you have any questions, feel free to reach me at optionboxer.com. See you later.